What's going on, Dividend Chasers? It's the Dividend Bloodhound here with another investing episode. In this episode we are going to talk about cruise line stocks, or more importantly the two big cruise line stocks that are on the market at the moment, that is Royal Caribbean and Carnival Cruises. Now I actually own shares in both of those companies because I feel like a little bit of a risk taker at the moment. I've got a bit of an appetite for risk, but I've put money in that I'm completely prepared to lose if it all goes Pete Tong. And that is what we're going to talk about in this video. The two biggest cruise line companies in the world. Will they survive? Will they get through? Because we've all seen the news that they're not going to get state aid from the US government, because basically these companies have flagged all their cruise liners to all sorts of different countries all around the world as to not pay tax in the United States. Then all of a sudden, when there's a handout from the federal government, these cruise line companies want in and want money off the taxpayer. The US government's gone. Ain't happening, guys. See you later. So these companies are now going to have to look elsewhere for credit, or look at their shareholders, look into opening credit lines or whatever they can in other ways. This has obviously massively affected their stocks. I mean, Royal Caribbean is 76% down as we speak at the moment, which is of course is what has prompted me to take a little bit of a gamble, or a big bit of a gamble, depends on your appetite for risk, and put some money in there, buy a few stocks, and let's see if we can get a massive return out of it. You can sort of see the analysis coming up in the next part of the video. Please, if I've brought value to you in this video, please hit the subscribe button in that corner right there, or hit the like button if you've been here before. That would be absolutely great. Thank you very much. And feel free to share this video on your social media channels if that's what you do. Please do that, and let's get this video out there and see if anybody else has the appetite for risk that I do. That being said, I'll catch you in the next part of the video. See you in a little bit. What's going on, guys? Welcome to this next part of the video, and here, as you can see, are our two cruise line stocks that have been heavily beaten up over the last couple of weeks or so as this crisis has really taken hold. We have Royal Caribbean as one of our stocks, and then we have Carnival Cruises as our other one. And these are the two big heavyweights in the cruise line industry. There is another one called Norwegian Cruise Lines, but they're not on Trading 212, so I can't really go after the analysis section of them too much. I'm just going to keep it to the two that we've got here, and the two that coincidentally I actually own shares in right now. Yeah, I am that crazy person apparently. So first up, we are going to talk about Carnival Cruises. So they've got the ticker CCL. They have a market cap of 6.87 billion. They have a dividend yield currently of 17.48%, but I would stand by for that to get cut at the moment. So I can't see that being maintained at all. So I'm fully prepared for that to get cut. They have revenue of 16.77 billion, earnings per share of £3.54, and they are trading today at £8.50 a share. Their low is pretty much as they are at rock bottom right now. I think there's a little bit there where they dipped just down to £8.07. And then the upside, or where they originally were, let's say they've been up at £53 in 2017, but they've come down a little bit since then, and they were mainly resting at about £35 a share, let's be honest. until this crisis absolutely smashed them into the floor. And then they did have a net income of, well, practically as near as makes no difference, £3 billion, and a profit margin of a fairly respectable 14%. Carnival is one of, if not the biggest cruise line operator in the world. They own P&O Cruises, Princess Cruises, Holland America and the Costa Lines, which makes them privy to quite a few cruise ship assets. These are expensive things to get hold of and build in the first place, and then coincidentally run. Obviously, for the most part, all of these ships are alongside at the moment with no guests on board at all. One thing that I will have to mention is there's no state aid is going to be forthcoming to cruise lines at the moment, because they decide to fly flags and be flagged to other countries other than the United States. So many in the Congress up on Capitol Hill decided to say, well, if they're not paying tax into the system, why on earth should they get bailed out? And that has had a detrimental effect on the share price. When people thought when it was thought that they were going to get a bailout, prices went back up to about £12 a share. That was still a bargain price, but then now they've been excluded. The price has gone back down to where it is, which is pretty much bottoming out at the moment at about £8 a share. There is a heavy risk involved in these companies. There is no help coming for them, so they're going to have to either dip into whatever sort of money they've put aside for a rainy day, if they can afford it like that, or they're going to have to open a credit line. And bear in mind, to do this, they're going to have to cut the dividend to do so, to help to pay for it. So I'm expecting Carnival to cut. I did actually receive a Carnival dividend payout when I first bought the stock. I only have a couple of shares because it's a bit too risky for me to put any significant money in, but I do fancy a little dabble and a little flutter in risk every now and again, and I actually received a dividend payout off them, but I'm thinking that might be the last one for quite a considerable amount of time now, while this happens over the next 3 months or so. And anyway, moving on to Royal Caribbean, we have another major heavyweight, maybe not quite as big as Carnival, but still owns plenty of cruise ships and has significant interests in TUI Cruises as well. They own like stakes in other cruise ship companies apart from their own line they obviously run. At one stage, Royal Caribbean, I'm not sure if they still do, but they had the biggest cruise ship in the world concurrently in their fleet for a very long time. Anyway, back to what we have. We have their ticker number, which is RCL. Their market cap was 6.22 billion. They have a dividend yield of 10.5%, but as I said with Carnival Cruises, I would stand by for this to get cut to nothing or suspended indefinitely. They have an EPS of $9 per share, which is actually quite high, and they've been trading at, let's have a quick looky here. They traded, their low was $22 only 10 days ago or so, 10 or 15 days ago. They're currently trading at today at 28, but they started off at a mountain of $140 a share. So that is a huge reduction in their share price. As you can see, they're 75% down. That is insane, and that is what has enticed me to take a little bit of a risk on these guys again. People are going to want to go on cruises when this is all over and abated, but I'm not expecting any dividends. This is purely for a capital appreciation side of things, taking a little bit of a risk with £50 to see if I can make a decent return on it over the long term. I'm prepared to hold this stock for years if needed, and we will see how quick or how long it takes them to recover. But I suspect they might, as there's no financial help coming from the United States, I suspect that they might have to open other lines of credit. And then lastly, they actually made 1.88 billion after tax and after income, which is a profit margin of a respectable 17%. So Royal Caribbean own their own cruise lines, Celebrity Cruises and Azamara Club Cruises, which is absolutely huge. Not quite as big as Carnival as mentioned, but still pretty big. And what I would say with these are the two biggest cruise lines in the world. Now, some of the weaker companies that can't get at the credit or haven't got the money in the bank will suffer here, and they could eventually go bust, and that will leave cruise customers with nowhere else to go but back to the big boys. These two are in the ideal position to weather the storm. It might take some time, but they're in the ideal position to scoop up all of the other custom from cruise companies that goes bust. But I think if there's two that are most likely to make it through, it is the two biggest companies, I would say. This doesn't constitute advice that you should buy these companies. I'm by no means telling you to do that. I have owned and I've got a few shares in each, but I know and I've assessed that this is quite high risk, and I've not committed any significant amount of money to it that I'm not prepared to lose completely if one of these does go bust. But that's just me. I'm just down to take a little bit of a risk to see if I can, like, it's big risk but big reward basically, which is inherently what investing is about, and if you have the appetite for it or not. It will be a while before these recover, but I can see a bright future in about 18 months time when they eventually do. And that is it for this part of the video, and I will Thanks for sticking around to the end, guys. I'm impressed you had the endurance to do so, and I really appreciate it. Please hit that like button and the subscribe button in the corner there. That would be absolutely fantastic. I hope you enjoyed the video. I hope it brought some value to you, and please let me know in the comment section below whether you think I'm absolutely crazy for buying a few shares, or whether you're going to join me in the madhouse and get into some cruise line stocks as well. Let me know what you think, and I will catch you in the next video. Bye bye.